Alibaba's IPO may be just days away, why it could set the pace for tech stocks. In today's cover story, Detroit's bankruptcy enters its most critical moments. Plus, fast food workers get ready to pull out all the stops in the fight for fair wages. And once the hottest trend on Wall Street, are dividend-paying stocks on the way out? First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, I'm Angela Miles. It's Wednesday, September 3rd. In today's first look, a money run from gold and oil as stocks made moderate gains and losses yesterday. Investors bailed out of gold, sending the futures down $21 per ounce, and oil lost $2.70 per barrel. Well, reports say Home Depot was hacked. The home improvement retailer tells the AP it is looking into unusual activity that may have compromised customer credit cards. Home Depot shares dropped 2% on Tuesday, and Apple denies an iCloud breach involving the hacking of online celebrity photo accounts. In our Trader Talk on this Wednesday morning, Larry Schober of SFG Alternatives, all good to go. Great to have you here.
Thank you.
It is a big week for economic news, including coming from the ECB and, of course, the jobs number at the end of the week. What will that mean for the market?
It's going to be flat-footed. That's what I'm going to say. I mean, ECB, will Draghi be able to pull something out of his hat that everyone's expecting? More importantly, we have the jobs number. And after yesterday's really hot ISM number, traders are now worried that the jobs number is going to be way better than expected, pointing to the fact that maybe the Fed's going to act earlier than they thought they would.
Gold and oil both made major moves yesterday, Larry. What is that telling you?
What it's telling me is that macro risks around the world are being lessened, even though it doesn't seem like it. But more importantly, we're seeing dollar strength combined with the fact that monetary policy is pointing to the fact that we're raising rates. That's a big negative, especially for the gold market.
From time to time, we like to play a little game called If I Had $1,000. Where would you invest $1,000 right now, Larry Schober?
Yeah, you know, this sounds plain vanilla, but I think I'd buy the VIX. Not because I think the VIX is going to go higher, but I think we're at really a high price in the stock market right now. The VIX is trading in the 5th or 6th percentile low. What a great way to be hedged against any kind of stock market decline.
Larry, always great to have you here. Thank you.
Thank you.
Chuck Coppola joins me now with more financial headlines. Good morning, Chuck.
Good morning, Angie. Wage rage is ramping up in the fast food sector, and workers are willing to do whatever it takes. Tomorrow, fast food employees in 150 U.S. cities are planning a nationwide strike as they demand higher wages. However, it is the first set of demonstrations where workers will risk arrest. Rallies are expected to feature acts of civil disobedience. We spoke with a Fight for 15 organizer who has high hopes for the group's latest round of action.
I just hope, not only, international, I just hope, the company that we're trying to, Burger King or McDonald's, what we're trying to fight for, I just hope that they hear our message. I hope that they take this event to let them know how serious we are. We're tired of living in poverty.
The protests are going beyond fast food. The New York Times reports thousands of home health care workers are also expected to hit the picket lines tomorrow.
President Obama takes off on a 4-day mission to Europe today. The president will spend time in Estonia to send a message that the U.S. is serious about defending Ukraine against the Russian invasion. This week, the Russian ruble tumbled to its lowest level ever against the U.S. dollar. The ruble is down 13% for the year. As that currency slides, it's making life tougher on the Russian people who have to pay more for imports. Russia is said to be on the brink of recession. The EU will decide on more sanctions by Friday.
It's off to Wall Street for former House Majority Leader Eric Cantor. The Wall Street Journal reports Cantor will take home more than $3.5 million as vice chairman and managing director at investment bank Moelis & Company. That's a huge pay leap from his $193,000 salary as majority leader. In his new position, Cantor will help the firm compete for business and advise clients on takeovers. OpenSecrets.org lists securities and investment firms as Cantor's top campaign donors in the recent election.
In Atlantic City, Trump Plaza is the next casino scheduled to close its doors. Revel Casino shut its doors yesterday. The $2.4 billion property was built in April of 2012 as the town's only casino with a total smoking ban. The owners are now attempting to sell the building through bankruptcy court. Trump Plaza closes September 16th. There were 12 casinos in Atlantic City at the beginning of the year. That number has dwindled down to 8. Analysts believe the remaining gambling sites will thrive with less competition in the market.
In today's cover story, people in Detroit have added a lot to American society, much of it on wheels, some of it from a recording studio, but its latest invention could be far more dubious. It may be about to rewrite the rules of municipal bankruptcy. Murals depicting the muscles of Detroit's manufacturing labor force stretch across the city's Institute of the Arts. But even a National Historic Landmark designation may not keep Diego Rivera's Detroit industry in Detroit. A bankruptcy hearing began this week that may determine whether the city sells its assets or whether insurers Bermuda-based Syncora and Park Avenue's Financial Guarantee, FGIC, lose nearly $1.5 billion in bad municipal bonds.
Who legally owns the artwork? Where legally was title passed to? In essence, you're breaking new ground here.
The artwork could lift Detroit out of its bankruptcy. The plan to keep the collection intact and pay a portion of the city retirees' pensions is also before Judge Stephen Rhodes.
He is going to put the well-being of the citizen first in all of his rulings, because the citizen is the real entity here that's being restructured and reorganized. Not the city, not the artwork, none of the buildings. It's the person that is the city, the resident.
After Detroit allowed $100 million in unpaid water bills pile up, this summer the city turned off the water to customers who owed more than $150. Some argue it's not much better for investors of Syncora Holdings, which closed up slightly at $1.75.
We can argue that, well, they're insurers, they bear the risk. You're charging a premium for your services, for your insuring of the bond's principal and interest, and if it's not paid, you got to pay up.
Whichever way the bankruptcy judge rules, it could affect how much interest some communities pay for municipal bonds looking forward. With dozens of witnesses to be called, Detroit's hearing will likely last into next month.
A Detroit-based tech company is signing off on a deal. CompuWare will be purchased by Thoma Bravo for $2.5 billion. CompuWare is the largest tech firm in Michigan and has been the target of activist investors. The company has slimmed down by cutting costs and laying off staff. Under the deal to turn private, shareholders would receive $10.92 per share. CompuWare stock rose 13% on Tuesday, closing at $10.59.
Cruising to a newly expanded fleet, Norwegian Cruise Lines buys Prestige Cruises International. The $3 billion deal merges Norwegian, one of the largest mass market lines, with a considerably smaller but more exclusive and upscale fleet. Norwegian operates 13 vessels that carry about 5,000 passengers each. Prestige operates 11 vessels that carry between 500 to 1,000 passengers. Norwegian will remain the third largest cruise company with 21 ships. Shares of Norwegian rose $3 yesterday.
Dollar General is raising the stakes in its bid for rival Family Dollar. Dollar General increased its bid to buy the chain to $9.1 billion. Dollar General may even try a hostile takeover if its bid is rejected. Dollar General CEO contends we are confident that our enhanced proposal sufficiently addresses any concerns that led Family Dollar's board of directors to reject our prior proposal. Family Dollar will review the new offer, even though Family Dollar prefers an $8.5 billion bid from Dollar Tree.
1-800-Flowers dials up a new deal. The company will pay $142.5 million for treats company Harry & David in an effort to broaden its food choices for customers. The deal includes Harry & David's brands, websites, retail stores, manufacturing plants, and the company's fruit orchards. 1-800-Flowers already owns Fannie Mae, Cheryl's, and the Popcorn Factory. The deal is expected to close in October.
One of the biggest events of the year could happen next week. Alibaba's monster IPO reportedly will launch its initial public offering sometime in the next 2 weeks, making for an exciting September, according to Kathleen Smith of Renaissance Capital.
Alibaba is going to be the biggest ever, so it's a little hard to compete with that. But we will highlight that there are a number of significant IPOs that are on the calendar, including a $2.5 billion IPO. That will be the largest ever REIT IPO done by Paramount Group.
Analysts also believe if the Alibaba IPO goes well, it will set the tone for other tech stock debuts.
Under Armour remains the underdog in an attempt to lure a big-time sports celebrity. The up-and-coming sportswear company reportedly offered between $265 and $285 million to try to lure basketball star Kevin Durant away from his endorsement deal with Nike. Nike exercised its right to match the offer, and Durant decided to stay put. Down maybe, but definitely not out, Under Armour remains a Wall Street darling. Its stock is up more than 1,000% over the last 5 years.
Bowing to pressure by activist investors, Darden Restaurant Group revamps its board of directors. The new proposal allows 4 seats to be filled by Starboard Value appointees. Starboard acquired an 8.8% stake of Darden and has been attempting to break the company into 3 parts. Darden is the parent company of Olive Garden and Longhorn Steakhouse. It recently sold its Red Lobster chain for $2.1 billion at the insistence of Starboard.
After a myriad of problems, McDonald's says it will overhaul its food safety procedures in China. The burger giant will increase the number of audits of its Chinese suppliers, and half of those will be unannounced visits. It'll also use more video monitoring and launch a hotline for whistleblowers. These procedural changes come after a McDonald's supplier was caught repackaging expired meat.
The tax man comes calling for a signature Silicon Valley perk. Free lunches. Tech companies including Google and Facebook have long provided free gourmet lunches and snacks for staffers. The techie trend facilitates both collaboration and longer work hours. Well, now the IRS is making it very clear that free lunches need to be listed as taxable income. The IRS will issue new guidelines. Being issued today on the economic calendar, it's the MBA Mortgage Index. Factory orders the Fed's Beige Book, auto and truck sales for August. On the earnings calendar, watch for H&R Block, PVH, Shoe Carnival, Navistar, and Toll Brothers. Still to come, are money pros ditching dividend-paying stocks or digging in deeper? Plus, are average investors too late for a rally in a popular home builder stock? And a politician's 2 cents on one of the most controversial topics on Capitol Hill. Halliburton agrees to pay $1.1 billion to settle lawsuits surrounding its role in the 2010 Deepwater Horizon oil spill. Halliburton was accused by victims and by BP of doing defective cementing work on the well before it exploded. Halliburton places blame on decisions made by BP, the operator of the well. The deal still needs court approval and does not resolve certain state suits. Halliburton shares have been rising with the market during the past couple of years. Bill Mahler is here now to talk politics and money.
Politicians and economists are ever debating the best policies to keep our economy healthy and growing, and there, of course, are strong disagreements as to how to do that. The book, America's Fiscal Constitution, argues that a balanced federal budget is essential. It was written by Bill White. He's a former Houston mayor, former U.S. Deputy of Energy, and current chairman of Lazard Houston, and he joins us by Skype. Welcome, sir. Now, you point out that throughout our history, there are fiscal heroes who really toe the line on deficit spending.
You bet. And it's a remarkable story that's not well understood. For 180 years, the nation only borrowed for 4 distinct and well understood purposes. But that consensus, that constitution, seemed to fall apart in 2001, and it's since been in disrepair.
And you note that actually our founding fathers directed the federal government follow the sort of pay-as-you-go budgeting policy.
Right. They were worried. They were worried very seriously that the new democracy may tend to shift bills to the next generation by using debt to fund routine spending. So they developed principles and practices to prevent that from occurring. And for generations, Americans followed those practices.
I know Ronald Reagan was an advocate of, he was into deficit spending. Where did the country first start going off the rails here?
Well, you know, the interesting thing about 1981, Reagan's first year, is that the budget documents prepared by the White House and by Congress did not show large amounts of deficit spending because they assumed that inflation would continue to push people into higher and higher brackets.
Are these principles that you talk about easily embraced by all factions in both parties, do you think?
Well, you know, it used to be that conservatives believed in balanced budgets because they didn't believe that you should disguise the cost of government. If there was a new program, there ought to be new taxes to pay for it so that the public knew what it cost. Progressives believed that we shouldn't borrow, that we should balance the budget in order to preserve a better future for the next generation, upward mobility. That's the way it was for a long period of time. And now we have both parties, for the first time in the history of the country, claiming that even at a time with record national income, the government needs to borrow. The federal government should borrow in order for the nation to grow.
Bill White, thank you so much.
Great to be with you, Bill.
Coming up, find out if the door is still open to making money on home builder stocks. And after the break, the real deal on dividends. Stay with us. Dividend stocks have been one of the hottest segments of the market this year for buy and hold investors. But is that still the place to be? Ed Jurtson of Mac Investment Securities is Skyping with us this morning to talk all about it. Good morning to you, Ed.
Hi, Angie.
What is your advice to clients here?
Well, high-yielding stocks are a draw for people who are looking for higher income. So they're leaving the bond world, if you would, and going to the high-yielding stocks. And you have to be really careful about that, not only from a risk standpoint, but also from a taxation standpoint as well.
What is a tax implication?
Well, those in the 15 to 10% bracket actually pay 0% tax on those qualified dividends. But you've got to be careful about states like California and New York that add tax on top of that.
And what about this? There's some short seller interest that has been building in names like Altria and AT&T. Now, those stocks yield around 5%.
Well, when you look at the relative growth of S&P 500 dividend-paying stocks over the last 12 months, those that actually are not paying dividends have performed way better than those who have. So I'm not sure why those shorts are lining up against those particular stocks. It could be for other reasons as well.
Well, tell us about the performance. How great has it been?
Well, when you look at from 1972 going forward, those companies in the S&P 500 that have paid dividends and increased their dividends, on average, are up about 10% per year. Compare that with the stocks that haven't paid dividends. Over that time frame, they're up about 2% per year. So over the longer run, those who have paid dividend stocks have done really well. But again, looking over the last 12 months, those stocks that have paid the highest dividends have not performed relative to those that don't pay dividends.
Among the high yielders, Ed, what are some of your favorite names?
Yeah, we stay away from individual names, but you can use exchange traded funds like from Wisdom Tree and from iShares. We find that as a very good way to get a bunch of different diversification from high yielding stocks in a very efficient way.
Good enough. Thank you for coming on the show.
Thanks, Angie.
Still to come, the so-called smart money is pounding out positions in home builder stocks. Find out if traders think there's still time for average investors to hammer out profits. Chart Talk is next. KeenOnTheMarket.com joins us now, and James has his eyes on the real estate market. Good to have you on our show as always, James.
Good to be here.
Toll Brothers reports earnings this morning. What do you see in the chart, James?
Right, so the chart is starting to look pretty strong here. The stock has been breaking above key technical levels after we saw a rush of money coming into the equity options market, getting long Toll and a bunch of other home builders in this space. We're also seeing bullish activity in the XHB. What's interesting about all of these names is that they haven't really participated in the market rally this year. The XHB, the ETF, is actually down about 5.5%. So I am expecting a good quarter out of Toll, and I am expecting the stock to go higher with the rest of the names in the space, especially because I see investors coming into names like these that aren't quite stretched from a valuation standpoint as the market hits new all-time highs.
You actually alerted our viewers to this Toll play a couple of weeks ago, correct?
Yes, absolutely, and I've been long the name since. I adjusted my position slightly going into earnings here. The trader came in and bought more of the OCT 37 calls, expecting the stock to move above 37 by October expiration. However, market makers are implying that the stock can get above 37 by the end of this week, so that is my upside price target for Friday's expiration.
You are sticking with this play. Good to have you on the show. Thank you, James, for your insights.
Good to be here.
Well, that's a wrap for today. Coming up tomorrow, our movie critic shines a spotlight on Hollywood for film studios that were the winners at the box office this summer. From all of us at First Business, thank you for watching our show.